Thank you very much, everyone, for joining us here today. We're speaking today with NeoMondo Capital. So let's get underway. So Pasi, can I please ask you to introduce us to NeoMondo Capital and both of you to yourselves, please?
Yeah, thanks, Brian. I'll take it from here. Mark, you can continue from your end. So NeoMondo Capital was established a couple of years ago to bring high quality private assets to the market. So our background, so the four founders have private equity, venture capital, investment, financial advisory, private banking background. So we're very kind of well suited to be a filter towards investors, and our longer term mission specifically is that investors can always come to us and they know that they have well analyzed and well kind of filtered private investment opportunities in place.
And yeah, from my side of things, I work for a company called Aceo Spirits Limited, which has been around for a little over 20 years and has been a real pioneer in terms of both independent bottling of Scotch whisky, but also private cask ownership and sourcing cask with Scotch whisky for private projects, whether that's independent bottling or indeed more recently in the last decade or so, investment as well, and growing the equity value of Scotch, because it obviously presents a huge range of benefits over conventional assets, and makes a very fantastic case for an asset diversification. Chiefest among these would be the fact that it's tax and duty exempt while it's stored under duty suspension in a bonded warehouse. There's no capital gains tax as well. So it's an area of growth for the Scotch whisky as a whole that we've seen really in the last decade. People realizing that it's a fantastic asset diversification, and it's a very exciting product category to be involved in terms of the heritage and the innovation that's taking place across the industry.
I guess you're half answering the next question even with that, which is about what inspired NeoMondo Capital to get into the Scotch whisky market. So I suppose that's slightly different in that you're looking at the professional investors here gathering together and looking at this particular niche and what is interesting about it.
Yeah, well, like Mark kind of mentioned, a lot of the fundamentals what comes to the actual investment proposal. What we wanted to obviously do is, and what we have done over the past 2 years, is create this network of companies and individuals like Mark here, who is a real whiskey expert rather than we are, but they are really been helping us to understand the market and how the value creation is done in a kind of most optimal way. And then obviously our job is here to package it in a way that it can be offered to professional or any investor for that matter, in a way that it really has that kind of low correlation to your standard kind of more conventional assets, but also that it has the risk enhancement itself.
Okay, so then if I look at NeoMondo Capital and I just say, okay, there's lots of ways to invest in whiskey. What sets NeoMondo Capital apart from the other available alternatives and opportunities in investing in whiskey?
Well, like I said, I mean, I think we have created the network, we have studied the market, and obviously created a professional vehicle behind it that people can get in with relatively low amounts to a well-diversified portfolio, and obviously that is a lot of kind of risk mitigation in the sense of it. Mark is probably better to understand or to answer the question in a sense that, okay, how much is it going to take as an individual to go and buy single casks in order to have a diversified portfolio of casks? But I would say that you're probably talking about at least $500,000 or upwards.
Okay, well, that's a good segue into the next section, which is really looking at whiskey as an asset class and understanding a little bit more about what it is and the unique characteristics around it, like you mentioned, yeah? So maybe we start off with just looking at, say, Scotch whisky casks. And maybe, Mark, what are the key factors that differentiate Scotch whisky casks from more traditional investment avenues?
I would say the fact that you are buying into something that is incredibly and inherently tangible, but it's also the fact that it's a living and quite literally breathing asset. The way that whiskey improves over time is the fact that it's engaging with the oak barrel, with the actual wood that it's in. Air is entering the cask, the liquid is soaking into the wood, and what's happening is it's actually improving over time. The ABV is naturally evaporating, so there is an element of liquid going away, which is again adding to the very finite nature of older whiskey because it is lessening all the time and the pool is always becoming smaller. But you are getting something that has been very much enhanced by the oak, something that's going to be fuller in flavor, more complex, and very, very marketable, both in terms of the arbitrary age that you're bottling at, whether you're bottling at an 18 versus a 15, for instance, and the fact that the flavor is going to be more intense but more refined at the same time. And that's obviously the exit point for all Scotch whisky is ultimately to be bottled, not necessarily the exit point for an investor or an owner, but for the final owner, if you like, the final custodian of that cask is ultimately going to put it into a bottle. And they are very, very aware of the fact that the pool is small and they do have to pay a premium to access that stock. To put that into numbers, it's a staggering statistic, but of all Scotch whisky produced across the whole industry in any given year, only 8% of it will actually make it past its 15th birthday. The vast majority is put into blended whiskey, so things like Johnny Walker, Bell's, Dimple, these kind of things, at around 3 years old, the legal minimum age for Scotch whisky. And then the very small amounts that get bottled as single malt whisky, which is to say unblended, the produce of just one distillery, that represents only about 10% of all the liquid produced across the business, the entire industry. And most of that is bottled at 10 or 12 years old. And that is another feature that's makes whiskey so advantageous as an asset class, because it's not like gin. It's not like a BMW 3 Series where you build it today, you sell it tomorrow. You get the raw materials in, you make the finished good, you sell it, revenue comes back in. Scotch whisky distillers are always having to think in enormous blocks of time ahead. They're having to think, what am I going to be selling at 18 years old in 18 years' time? What am I going to be selling at 15, at 12? What am I going to be blending at 3? There is only so much production capacity that a distillery can do. Many of them do actually run 24/7, non-stop, just constant shifts. But some don't. Some don't have the physical capacity to do that. So there's an enormous amount of planning. And what we found is that the shift in the global perception of Scotch whisky has been such an enhancement, going above things like brandy or champagne that have traditionally been, especially in export markets, a symbol of wealth or quality. Whiskey's overtaken that, and demand is surged. But the problem is this demand wasn't predicted 10 or 15 years ago. So now distilleries are actually in a very unique position where they are having to go back to private cask owners and buy back their own whiskey to satisfy the demand that they have now for the regular releases. So there's a lot of moving parts to whiskey, but I would say overall they all point towards it being an advantageous asset class. And I think one that we mentioned before is the fact that it is a tax-free investment, a tax-free asset. It's under UK law, it is deemed a wasting asset because of the natural evaporation of liquid. So it's actually completely exempt from capital gains tax. And because it's duty suspended, held in a duty-free warehouse, there's no tax or duty to be paid on it. That only ever gets applied at the point of bottling. So from the point of view of an investor, you're going to own this cask for a period of time, sell it on and realize its value. The cask is never actually going to leave the bond during that time. So it's never going to be privy to tax or duty. So you are looking at seeing all of your value growth coming back to you. You're not having to share it out with the tax man or anyone else.
Okay, so that's looking at it from a macro level. But then when you dive down there into it, and you mentioned the different distillers and things like that already, what makes the certain bottles or casks or distilleries more desirable or better performing as investments?
It really comes down to a few factors. Some of the probably the most obvious ones will be brand power, and essentially the current success level, I would say, of that brand in terms of its own distillery direct releases. The kind of poster boy for that is, of course, the Macallan distillery, very big distillery in Speyside, recently renovated, very much held as a global indicator of quality Speyside classic Scotch whisky for a variety of reasons, often called the Rolls Royce of malts, which is up for debate, but gives you an indication of the kind of perception the brand has. That is a whiskey that trends very much above pricing when it comes to the distillery direct bottling. So where most 12-year-old, 10-year-old entry-level Scotch whiskies would retail at around about the £40 mark here in the UK, Macallan sets a quite unprecedented price level by charging upwards of around about 65 to 75 pounds at retail for their entry-level 10 or 12-year-old spirit, which is obviously a huge jump. That obviously creates a certain degree of desirability for that brand. Macallan is also very aware of that, and they have had a marked unwillingness over the last 30 years to release stock in cask to the open or independent market. Which means that the pool of stock of Macallan in cask that's out there, that exists and is available to us as private owners or investors, is very limited. It is at least 30 years old at this stage, and it commands a very, very high price. So that's kind of got the perfect storm of factors. No longer available in cask, very powerful brand, very much at the peak of its success. And to put that into sort of monetary context, you'd be looking at easily, a six-figure sum for a cask of Macallan today, irregardless of other features. Looking at less outlier brands like that, other features that enhance value would be wood type. We often talk in Scotch whisky production that there's only 3 ingredients: water, barley, and yeast. I am a vocal advocate that there's actually another 2. One is thyme. Thyme is incredibly important to whisky. And the other one is wood. Wood is often overlooked, but the type of barrel that we're actually maturing the whiskey in is incredibly important. The most common, just round it out quickly, the most common type is ex-bourbon casks. They're very cheap and easy to get hold of because bourbon producers only ever use their barrels once and get rid of them. So finding a Scotch whisky in an ex-bourbon barrel is fairly easy, if you like, but less on more uncommon styles, things like former sherry casks from bodegas in Spain, wine barriques from, say, Bordeaux, and so on and so forth. Those casks are physically more expensive and more difficult to get hold of for the distillers or companies like ourselves that are filling liquid to cask, and they are just in a much more finite pool, so that would enhance the value up. And that's a value enhancement you can enjoy right throughout the life cycle of the cask or your period of ownership with it. So if you were to buy that as a newly filled cask and age that up, at 10 years old, at 15 years old, at even 8 years old, that cask is always going to enjoy a greater value premium than an equivalent cask from the same distillery at the same age, but in a more common wood type, if that makes sense. And then, just to round that off, time, age, as we've said, is incredibly important. We know there is a really, really, truly small amount of whiskey that makes it past 15. So to enter that segment, to get hold of liquid at that age, it's incredibly difficult. It's a lot of waiting and a lot of having to pay a premium.
Yeah, let me round that up because there's been quite a lot of new distilleries popping up over the past couple of years because the demand is greater than the supply, as we know. But the real challenge for these upcoming distilleries is how they're going to get a name, and obviously that's going to cost money. So then we are not specifically investing into those type of casks, but we are looking at also these outliers which are kind of in the fringe of becoming something bigger because there's a real kind of investment premium to be made. But at the end of the day, it's very safe bets in a way because the value creation is done over time, as Mark just mentioned.
And I think that's where the tokenization proposition becomes a very powerful tool to an investor because, as Pasi alluded to, the state of the market now for cask whiskey, that the level of sort of starting budget you would need to build, a truly enviable portfolio of top performing brands, because these are really getting more and more scarce to get hold of in cask, even beyond outliers like Macallan, that your starting capital that you would need to get that portfolio built is going to be quite high. And also you're going to need a lot of time as well as buying power to build that up. Whereas if you look at tokenization, you can approach that building that dream portfolio in bite-sized chunks in manageable ways, and also you're getting the benefit of the group's buying power to access great stock that just wouldn't be there, that just wouldn't be on the table to a single-handed investor.
Well, that chat, it takes us neatly then to returns. So we talk about the different barrels, the different distilleries, the different methods, and we also talk about ages. And I think the age where it all becomes real is at 3, and then we go to, is it 15 years where there's only 8% of it left. And you know, I've seen, and other people have seen, various curves on pages. But can you maybe give us an insight into what sort of returns investors can expect from investing across that time horizon?
Well, from our perspective, when we look at casks to add into our portfolio, we never even start looking at casks where the expectation would be less than 10% a year. I think Mark can give a little bit of a more wider answer to it because he's been doing this for a long time. So.
Yes, in the years that I've been in whiskey, I mean, we've seen really quite impressive year-on-year growth in terms of value growth, and it's a tired phrase, and I'm loath to use it, but it's very appropriate here. And the old phrase that rising tides lift up all ships, and that's definitely something that we've seen. So I think you compare it to even collectible bottles, and you have, that's an arena where Macallan is very much an outlier. Those bottles are setting auction records for the highest sums paid, but it's not necessarily true that that's dragging up the sort of up and coming brands or brands that are not quite at the Macallan stage yet in bottle. But in cask, the opposite is true. We're seeing a complete uplift in the market. I would have said, going back to 2.5 years ago when I first really started taking an active role in the gas market, the lowest annual value growth was probably somewhere around 6.5%, with the outliers or the real top end being around about the 15% mark. And today, within about 2.5 years, we've seen that shift where the bottom end of the market is now really sort of 9.5. I think, as Pasi says, 10 is a very sensible and if conservative number to put on it, but the top end of the market is pushing up towards 20% now, and that is just moving on year for year. We're seeing that growth happening, and it's happening across all brands. It's not just being driven by these outliers like Macallan. In fact, there's less and less of that in the market because these casks are so old. Every year they're disappearing because they're being bottled, they're being consumed. I always say it's a bit like, imagine having a Ming vase that's one of 3 in the world, but every couple of years, one of the other owners smashes their vase. It's a bit like that. The pool only gets smaller. And it's meant that people are looking across the wider spectrum of Scotch whisky for other brands. As Pasi said, it is sensible. It makes sense to stick with brands that have brand power. But again, the market is widening its scope, or I should say the end user, the end consumer, whether that's an independent bottler or a private individual who wants to physically take that liquid and put it into cask, they are widening their willingness to work with different brands and try different styles that maybe wouldn't have been as popular 10 years ago, but are very, very viable now.
Yeah, I mean, well, to kind of further to that point, like looking at Far East, like China, India at the moment, or even the Southeast Asia as well, markets are growing extremely fast, which means that they are getting more and more sophisticated about their products. And we've seen this back in US or like in Europe, for example, over the decades, that when the consumer gets more sophisticated, then they want better things. And then we could go into the category where we concentrate, which is the single malts, kind of the 12 plus years, where the price tag is going to be completely different. And there simply isn't enough supply for that compared to the demand. So the demand is just getting higher and higher. So that's from an investor point of view, things couldn't be much better.
So the rising tide is lifting all the boats, but this is still an investment activity. and there's risk involved. So, what are the risks that are involved in investing in casks of Scotch whiskey, and how does NeoMondo Capital manage these risks?
Well, one direct risk, obviously, especially for euro investors, is the currency, because the underlying investments are in pounds. I think looking at the whiskey market in general, I think the consumer behavior going towards a little bit different type of drinks is probably going to be affecting the kind of the major part of the market, and I'm talking about the blended, blended kind of whiskey market. But on the single malt side, I don't see any kind of drops coming anytime soon.
Yes. So as Pasi said, the single malts are certainly driving the driving force behind value growth and interest in Scotch whisky. Blends still contribute a large portion to the fortunes of the business, but the demand amongst high net worth clientele, amongst the connoisseurs and drinkers, is to get quality single malt. But another, I think, very encouraging feature of Scotch whisky, compared to as recently as 25, 30 years ago, is that the industry is today very, very consolidated. So you don't really, other than a handful of small startup distilleries that are a singular self-contained business, when we talk about big brands like Macallan, Lagavulin, Talisker, Springbank's Independent, sorry, these big brands are actually part of big distilling companies that are not predicating their business exclusively on Scotch. So we know that a big company like Aceo is seeing probably about 50% of its revenue coming in from the sale of Scotch whisky products, but their portfolio is also backed up by very internationally successful and stable categories and brands like Guinness Beer, Tanqueray Gin, Gordon's Gin, very mainstream high volume products that give a huge amount of financial credibility and stability if, for instance, one market started to go a little bit quiet, which, for the record, is something we've not seen. Markets are getting busier and more congested and with more demand. And that's another big difference. There's enormous markets that just simply didn't exist 20, 30 years ago. Mainland China, Southeast Asia, these would have had very, very scant amounts of mostly blended whiskey going out there, because that's really all that the emergent middle classes could access from a monetary point of view. And now, really, in the last decade or so, that has shifted quite starkly and quite quickly to premium single malt, where people are now educated drinkers. They know what they want. They know they want quality. They know they want age. They know they want specific wood types, specific brands. And as we know, there's just not enough there, because the poor distillers, bless them, that were working away, filling casks 10, 20 years ago, could not have predicted that an enormous, a truly incomprehensibly enormous market in terms of per capita, like mainland China, would come on and fall in love with Scotch whisky, which, as I always say, is very bad news for us as whiskey drinkers and enthusiasts, because it means our cups are going to go dry. But for us as investors and cask owners, it's the best news. So our cups will go dry, but our wallets will certainly overflow. So it's good and bad.
When you mention some of those new markets, when you speak to investors and others there, when they look at products like this, the authenticity and quality of the underlying product that's getting invested in is very important. It's not that you have that problem, say, in Scotland with Scotch whisky necessarily, but there's globally this has been a problem. So when you look at NeoMondo Capital, what's going on with this investment product, how are you ensuring the quality and authenticity of the product is what it should be?
I mean, I think the greatest asset you have on your side there is that Scotch whisky is one of the most regulated products in the world. I had this debate with someone recently that it may actually be more regulated than something like the aviation industry, which I won't comment officially on that, but it very much is, in terms of especially cask whiskey stored under bond. To get things like a WOWGA, to get bond registered and accredited, that is a government-controlled entity that goes through His Majesty's Revenue and Customs here in the UK to apply for bonded warehouse space, which all single casks of Scotch whisky have to be kept under duty suspension, is a long, rigorous process. So, and we know that legally all cask whisky has to be stored under bond. So if you know that your cask is under bond, it's in the right place, and HMRC knows where it is as well. There's obviously an HMRC-backed paper trail that supports that as well. But you know what? That's very top line. Something that I'm very proud of here at Aceo is the fact that we actually have at the moment 3 with plans for more, but 3 bonded warehouse spaces up in Speyside in the northeast of Scotland, right in the heart of whiskey-making country, which are fully owned by ourselves and fully accessible. So, for instance, we would be more than happy for NeoMondo's clients that have to access NeoMondo's portfolio with us and physically come and see the cask, lay their hand on it. You know what? If we play our cards right, we can maybe even open the bong and have a little sniff. I think Pasi will have to take the final word on whether liquid comes out of it or not. Drinking the profit is a question there, but yeah, you can physically come and visit the asset, touch it, see that it's real, and see that it's well cared for. Another advantage of ourselves is as well, we, unlike distilleries which are producing on an enormous scale, they can't physically look after with great care and attention every single cask that's in their warehouse, that's in their care. Because we're much more boutique in our approach to warehousing, that is included as part of the service with ourselves at Aceo, that we physically check regularly on every single cask. And I was actually up there last week, and I've seen the hard work that the gents in the warehouse have, crawling all over barrels with head torches, just checking the integrity of everything. So yeah, there's a lot of avenues of peace of mind that, you know, that the liquid is authentic, that it is where it should be, and principally as well that it is being cared for and that your investment is being maintained and protected.
From kind of NeoMondo's point of view, obviously, we've been talking to these partners like Mark and their company for the past 2 years and try to understand who would have the credibility and the accreditation to actually be worthwhile, that we can serve kind of comfortably our investors, because obviously there needs to be a certain amount of safety net in, you know, behind it, and there's all kinds of let's say entrepreneurs in all types of markets, as we all know. So we're very, very happy that, you know, we are partnered up with them.
So yeah, well, getting back to going to visit the casks, you know, and we've talked about this before, and it's a feature of the whiskey investment discussion, is about how important passion is in the investment. It is, yes, it's a big industry. It's not a toy industry, but nonetheless, it's a unique type of investment. So maybe if I could ask, how does the cultural and historical significance of whiskey influence its investment potential? And are there trends or shifts happening that affect this, that are happening in recent years?
I think we're going to have 2 very different answers to it. So Mark, can you please go ahead first, and then I'm going to elaborate from a different angle, if that makes sense.
Absolutely. I think, you know, with whiskey, I've always believed is what makes it such an enjoyable, especially when we talk about it as an asset class, what makes it so fun is that you can approach it equally with a heart and a mind's argument for owning and investing in it. You know, on the mind side of things, everything we've talked about, the security of it, the stability of it, the tax benefits are myriad and quite profound. But beyond that, you know, I think such an important part of Scotch whisky, and what differentiates it from, say, Irish whisky or even very successful newcomers like Japanese whisky, is the heritage aspect. You can kind of split hairs about the fact that Bushmills in Ireland, it's probably going to ruffle your feathers, Brian, certainly has the oldest legal grant to distill, but it is quite unclear, you know, who actually started distilling, whether it was Irish, Scots, or somewhere else entirely. But Scotland has emerged as being, you know, this sort of pinnacle of whiskey production, and I think a big part of that is not just the heritage, or even the fact that we have a huge number of distilleries. We've got well over 100 active distilleries today in Scotland. But I think an important part of it is the diversity. You know, you can go, if we talk about the regions, you can go to Speyside in the northeast and taste a whiskey like Glenfiddich that's, you know, very apples and pears, and it's soft and sweet, and it's partly matured in sherry casks. But then you can travel across the water to the island of Islay in the southwest of Scotland and drink a Lafroig, and you're going to get hit by this entirely different flavor that's smoke and earth and peppercorn spice. You know, that's what makes it so exciting, and that's what makes it such an interesting proposition. I think with whiskey as well, it's you know, it's a similar argument to, you know, why buy a Bentley over a an Opel Astra or something like that. They both essentially have four wheels. They've got an engine. They do the same thing. But with the Bentley, you're buying something a little bit more prestigious. You're buying the heritage. You're buying something that's handmade and genuine. And I think that's the difference between another spirit category like brandy, which is fantastic, has casks involved in it, distillation. There's a lot of craft that goes into it. I really enjoy brandy. If anybody out there loves brandy, don't come after me. But Scotch whiskey just cuts a little bit different because you've got much wider span of ingredients, if you like. You've got different wood types, you've got different fermentation lengths, different distilling methods, and crucially, it's back to that T word. It's time. It needs time. Whiskey, most single malt whiskey is not really bottled ready for drinking until at least 10 years of age. So you're talking about a very, very long time. And I think one thing that I always hold starkly in my mind, that if you're drinking a 40 or 50-year-old whiskey and you look at the distillation date as being 1971 or 1965 or something, in all frankness, the men that made that whiskey are long dead. Their product has outlived them just by sitting in a barrel in a warehouse somewhere in Scotland, not doing an awful lot apart from aging and increasing in value. And I think that's quite profound.
Yeah, I think I'm going to look at it. I'm going to talk about it in a purely kind of investment point of view. I think, Mark, you kind of summarized the passion part of it. But like I said early on, that we are here to kind of filter good quality investment opportunities, and we looked at a lot of these private investments, like say like art or diamonds or that kind of things, and I simply, I understand. I know a lot of people who invest in art, and they made some good returns on that, but there's no. It's not a productive asset. It doesn't change. It's like a bar of gold. You can sleep with it. You can do whatever you like with it, but it doesn't change. So it doesn't have the value creation part at all. Although all of those things, diamonds and art, they have the passion side like the whiskey has, but the whiskey, when it's in the cask, it actually is a productive asset as well.
Fantastic. So if I put all that together, and we've done a deep dive into whiskey as an asset class. So for somebody who doesn't have this in their portfolio, what advice would you give somebody who might be considering adding Scotch whiskey via NeoMondo into that portfolio?
Well, you should have it. That's it.
The simplest advice.
No. Well, obviously, being a private or alternative asset, it should only be a certain part of your portfolio. So you should, number one, kind of maybe consult your own financial advisor. But if there's any kind of specifics that you would like about the underlying the investment vehicle or the actual investments that we do, we'll be happy to elaborate on that.
So how does a tokenized investment product, such as this that's issued out of Luxembourg, offer advantages or benefits that other traditional investment avenues might not offer?
Well, the technology itself obviously helps investors to not only to onboard themselves, easier on the platform, so they can access different types of investments throughout the same process. But then the second and the most is that we can so-called kind of fractionalize the actual investments, like we talked about it earlier already, that you have a lower minimum to get the same advantage as a real professional or even an institutional investor.
And maybe if we could elaborate a little bit about how the tokenization process and how that technology enhances liquidity and accessibility for investors.
Yeah, well, as it is in blockchain, and obviously there's an automatic secondary market. We all know that it hasn't grown to a place yet where it will be extremely effective. But if you can imagine that 5 years from now, all these private assets can be traded from peer to peer on blockchain, as they can be done obviously today, but the market simply isn't there. So we need different actors of the markets kind of globally to kind of come together and make it happen.
I think in the context of whiskey, one of the greatest advantages of a tokenized platform is you can take a fractional investment and really increase the potential and the potency and indeed the echelon of cask whiskey that you're going to get access to by being part of that platform versus going it alone, and the level of budget and frankly as well expertise, work that you're going to have to put in to educate yourself and find and build that portfolio, having that already pre-made and been able to buy into that already well hewn and performing and successful portfolio is certainly much easier and much more viable than trying to do it yourself, both financially and practically.
So looking towards the future, what would you envision for where is this whiskey investment market going, and how does NeoMondo Capital plan to adapt and innovate within it?
Well, as we've discussed before, and Mark has kind of stated it very well, the market is in a very healthy situation, especially the part of what we concentrate on, so the, let's say, the more aged stock of single malt that keeps growing year after year. Demand is higher than the supply. So yeah, that's where we really want to grow. And obviously we are keeping an eye and an ear on the market all the time and trying to understand what are the developments, and then see if there's any other opportunities that might arise.